Welcome to this video where we'll be discussing one of the hottest topics in the world of finance and technology, central bank digital currencies, or CBDCs for short. CBDCs are digital versions of a country's fiat currency issued by its central bank, and they have been gaining a lot of attention in recent years. On one hand, CBDCs have the potential to revolutionize the way we think about money, making transactions faster, cheaper, and more efficient. They could also provide more financial inclusion by allowing individuals who may not have access to traditional banking services to participate in the economy. Additionally, CBDCs could help combat illicit activities such as money laundering and terrorism financing. On the other hand, there are also concerns regarding privacy and security, as well as potential risks to financial stability. CBDCs could also lead to a consolidation of power for central banks, potentially undermining the role of commercial banks and other financial intermediaries. CBDCs also have significant geopolitical implications. With the rise of digital currencies, countries with CBDCs may gain more control over their own monetary policies and reduce their dependence on the US dollar as the global reserve currency. This could have far-reaching implications for international trade and finance. So, join us as we explore the world of CBDCs. Welcome back to Geopolitics and Money, the #1 channel where finance, commodities, geopolitics, and investing intersect. Our mission is to furnish you with cutting-edge analysis and trends in the spheres of precious metals, digital assets, commodities, and investing. By subscribing to our channel, you'll be empowered with the tools and knowledge necessary to stay one step ahead of the curve, always in the know about the latest developments. Despite the potential benefits of CBDCs, there have been challenges to implementing it successfully. While legislators and politicians may like the idea of CBDCs, the reality is that implementing a successful digital currency system requires a significant amount of planning, resources, and technological infrastructure. Several countries, including China and Sweden, have been experimenting with CBDCs and have made progress in their development. However, there have also been some setbacks and challenges in their implementation. For example, China's digital yuan has faced concerns regarding data privacy and security, and there are questions about how it will interact with existing financial systems. In addition, some countries have faced challenges in simply getting started with CBDCs. For example, the U.S. Federal Reserve has been conducting research on the potential benefits and risks of CBDCs, but has not yet announced any plans for implementation. Similarly, the European Central Bank has been exploring the concept of a digital euro, but there are still many questions about its design and implementation. In February 2023, U.S. legislators introduced a bill that would prohibit the Federal Reserve from issuing a CBDC directly to anyone. Representative Barry Loudermilk released a statement saying that the Fed should be focused on its core mission of stable prices and max employment, not tracking our transactions indefinitely. In 2021, Nigeria's central bank announced plans to introduce a CBDC, known as the e-Naira, in an effort to promote financial inclusion and reduce the country's reliance on cash transactions. However, the introduction of the e-Naira has faced significant challenges and criticism. One of the main concerns raised by critics is that the e-Naira lacks interoperability with existing payment systems and is therefore not easily accessible to all users. In addition, there have been concerns about the e-Naira's security and the potential for it to be used for illicit activities. Another challenge facing the e-Naira is a lack of trust and confidence among users. This is partly due to Nigeria's history of financial scams and fraud, which has made many Nigerians wary of digital payment systems. Despite these challenges, the Central Bank of Nigeria went ahead with the launch of the e-Naira in October 2021. However, the rollout was plagued with technical glitches and issues, with users reporting difficulties in accessing and using the system. As a result, the central bank was forced to suspend the e-Naira just 2 weeks after its launch. The bank cited technical issues as the reason for the suspension and stated that it would work to address these issues before relaunching the system. The Nigerian government has imposed restrictions on cash withdrawals from banks in an effort to facilitate a successful launch of the e-Naira system. The new restrictions limit cash withdrawals to approximately $225, equivalent to 100,000 naira per week, with a daily maximum of around $45. This move highlights how Nigeria's financial landscape has been characterized by economic disruption since the introduction of the e-Naira system, adding to a series of challenges faced in its implementation. According to Godwin Emefiele, the governor of the Central Bank of Nigeria, the main purpose of introducing CBDC is to promote financial inclusion in the country. He believes that the evolution of money from physical forms like commodity and metallic to paper, plastic, and now digital necessitates keeping up with global trends. Emefiele is of the opinion that the CBDC can solve several financial issues in Nigeria, such as inflation, monetary censorship, slow payment channels, unreliable cross-border payments, and limited access to foreign exchange. However, the current reality in Nigeria contradicts his views, as the situation is moving from banking the unbanked to unbanking the banked. Recently, the UAE Central Bank completed the world's largest pilot of CBDCs in collaboration with other central banks around the world. According to Raphael Cintron, founder and CEO of The Wealthy Expat, this is a concerning development for many people, including specifically his European clients, who are afraid of CBDCs and worry about the banks controlling the monetary system even more. As a Dubai resident who spends his time there and understands the cash-heavy economy, he does not see CBDCs being rolled out effectively in the UAE. Everything there is done in cash, from buying cars to properties and even restaurants. If suddenly the government were to say that this is not a cash economy anymore and CBDCs are coming, people would be angry, even the locals. This is not something that the government can just say and expect people to accept. It's a cash-heavy economy, unlike Europe, where cash usage is limited. The UAE government may be trying to create a good relationship with other countries around the world, specifically the West, by pushing for CBDCs. However, it is not actually going to be implemented because most people in the government and banks there are traditional and do not even accept crypto. They have been working in this industry for 30 to 40 years, and if you tell them that you are going to use stable coins or digital dirhams, they do not understand it. Therefore, Raphael Cintron concludes that the UAE economy is not ready for CBDCs. It is an emerging country that is growing at a massive rate, but it is not going to apply these things that the West wants to apply. He sees CBDCs getting applied in the West much faster and much more strictly than it getting applied in the UAE. As we've seen, there are many challenges and cultural factors to consider when introducing such a new and radical change to an economy. But this is just the beginning of a larger conversation about the future of money and digital currencies. There are many other examples of CBDC implementations around the world, and we'll be exploring those in our upcoming videos. So, if you want to stay up to date on this important topic, make sure to subscribe to our channel and hit the notification bell. We appreciate your support and look forward to bringing you more valuable insights on CBDCs and other related topics. Thanks for watching.